Hey, what's going on, everyone? Another accounting video. So, what we're doing today, I'm just going to jump straight into it, is 15.7, and we're going through the last exercise of bad and doubtful debts. Okay. Yeah, so last episode of bad, doubtful debts. And we've been given a set of numbers from the 31st of October 2025, and we're just going to be making adjustments, doing the bad and doubtful debt allowance, and working from there. So that's going to be where we're working on here. So you're going to see in a moment what I mean. I'm just going to get the starting page right. So let's move across. So we see here exercise 15.7. It's on your textbook on page 416. So page 416, and the workbook in your physical workbook will be page 381. So Jamie Tape operates a sports store called Omni Sports. His main customers are the Western Football Club and the Eagles Soccer Club, both of whom use the credit facilities Jamie offers, and they frequently receive a discount for early payment. On the 31st of October, Jamie provides the following information, and you can see it's got accounts receivable, accounts payable. We've got two lots of depreciation. We've got advertising, allowance for bad doubtful debts, bank, buying expenses, capital cost of sales, discount expense, discount revenue, drawings, fittings, fixtures and fittings, GST, insurance, interest expense, inventory, loan, and that's payable 1,200 per month. Prepaid rent, sales, sales returns, van, and wages. Okay, so that's all the information we've been provided. Now, we've also been given additional information. So our additional information stipulates that a physical, there we go. Sorry, I'm just trying to get this to load up. There we go. There we go. A physical inventory count showed that 64,100 inventory was on hand, so we'll need to compare the inventory. Yearly rent is paid in advance on the 31st of May, so we've got prepaid rent, so we need to calculate all that. We've got 410 is still owing from the local paper for an advertisement which was run on the 30th of October 2025, so you've got accrued advertising. We need to do depreciation. Eagles SC went bankrupt, so we need to do a bad debt write-off. All sales are made on credit, and 3% of sales are, 3% of doubtful debts are net credit sales, so we'll need to calculate that. A payment of 1,650 for insurance, including GST, has been incorrectly posted to wages, so that's Unit 3 stuff. And reports are prepared every month. So we've got a little bit to do here. So what we'll do, we're going to get the post-adjusted trial balance. So I'm going to make sure we at least do the post-adjusted trial balance. I might, and H, we might be dot pointing G, F, and E. So we'll just see how that shapes up, alright? So let's smash out 15.7. Let's do that. So we've got, hold on. I'm just trying to skim read of something. Hold on, I'm just having a quick skim read of something. Okay, yeah, that stays as is. Cool. All right. Sorry, I just saw something. I was like, oh, that's interesting, but no, it's all good. So A, we're gonna make this smaller. We're gonna make this bigger. There we go. Love to see it. So I'm going to be working off the textbook here. Now, good water. All right. We want to reference one accounting assumption, explain the purpose of making balance day adjustments. Your answer is the accrual basis, or the accrual assumption. So when you answer this, you need to go, the accrual assumption dictates that the business must, hold on. The accrual assumption dictates the business must ensure that all expenses earned incurred, it's a revenue, incurred in a period are matched up to all the revenues earned in the same period to ensure that profit is accurately calculated. This means this means completing balance day adjustments such as depreciation to ensure the correct depreciation figure is calculated. Boom, simple, nice. So that's our, I went too far. That is our correct answer. That's what we want to see. So I'm going to zoom in on that just so we're on one page. And we're just going to delete that. So, sorry, they always pre-bold these, so you're just going to, you have to bear with me a slight moment. Okay, just didn't want to delete the bold apparently. No. Alright, so then we'll just put this here. You'd think I'd learn to, actually make the adjustment beforehand, but no. Just no. Anyway, so let's move forward. So we want to put our date on this journal. So we're just going to go October 31. Now, I'm just going to be putting 31 on each transaction. Thankfully, when we're showing the journal entries for B, it's to record the necessary information. Adjustments, narrations happen to be not required. Now, I'm going to have my calculator up. So you should be able to see. I'm just going to double check. Yep, you can see that. So I'm going to make sure the calculator is up, and so when we get that, it'll be all sorted. So the first one we're going to do inventory and inventory. Now we're going to be doing the inventory loss or gain. So we look at the first dot point, 64,100 was counted physically, and we check the trial balance. This is pre-adjusted. We see 65,100. That means that we said we had 900 extra. There wasn't, so we need to put that as an inventory loss, and that is 900. 900. Nice. We then go 31 for the next one, and yearly rent was paid in advance on May 3rd, 2025. So that means between May and the end of October, you got June, July, August, September, October. That's 5 months. So let's have a look. We paid prepaid rent, 12,000 across 5 months. It'll be 1,000 per month. Should be, hold on. Yearly rent was paid in advance on, so yep, that says 12,000. That's okay. Sorry, I'm just having a look. Yeah, that should be 12,000. Yearly rent 1,000 per month. So rent. Hold on. Yep. So that's 1,000 a month. So I'm just doing, and reports are prepared every month though. Sorry, I'm just having a bit of a moment. Ah, yes, yes, I see what I've done. So that's what that works out to. Yearly rent paid in advance. So 5 months. So, alright, I'm going to bring up the textbook because I want to discuss something with you. Just there's a bit of backwards math here. So, what's happened is this prepaid rent is $12,000. There we go. So that prepaid rent is $12,000. But that is for 7 months. 7 months. Because you got, so it goes from May, so end of June, July, August, September, October. Right? So that's 5 months. So the remaining 7 is sufficient for those 12 months. So let's divide that by 7. Okay, that's even more confusing. So I'm just going to play with some numbers here just for 20 seconds. Thanks. What? June, July, August, September, October. Oh, because it hasn't adjusted yet, so it's 8 months. Yes, it's 8 months. Sorry, they haven't actually adjusted for rent yet. I'd automatically just gone, yep, they've already paid the rent. No, they haven't. So it's technically 8 months. So 12,000 divided by 8, will be 1,500. Yep, so it's that there. So it's just making sure that little there. So rent, expense, and prepaid rent expense. So the reason it's 1,500 is because you've got 12,000 and the 3 months that have passed and we haven't done the rent adjustment yet. So it's only June, July, August, September. So there's our 4 months. So that means we've got 8 left and it becomes 12,000 divided by 8. It's 1,500. So that's just where that fits in. The next one, 410, is still owing to the local paper for advertising, which was run on the 30th of October. They haven't paid it yet, so that becomes a liability. They have, though, had advertising expense, 410, and you've got accrued advertising expense, 410. So don't forget our accrued expenses. The van is depreciated 10% using the straight line method. Fixtures are depreciated at 15% per annum using the reducing balance method. So let's do the van depreciation. So depreciation of van, and then we've got accumulated depreciation of van. So if we look at van, we see van. It's 36,000 multiplied by 10. Okay, nope, I've just decided to do it that way. 36,000 divided by, multiplied by 0.1 is 36. Yep, 3,600. There we go. Now we've got to do it monthly, divide by 12 because there are 12 months. 300. Now, if it was multiple months, we would multiply that answer. There we go. We would multiply that answer by however many months. So if it was 2 months, we would multiply it by 2. Anyway, we've got now depreciation of fixtures and fittings, and then accumulated depreciation of fixtures and fittings. Don't forget we go by the carrying value in this one. So the carrying value here, if we look at fixtures and fittings, so 9,000, fixtures and fittings happens to be worth 50,000, so 59,000, 9,000, so it becomes 50,000 multiplied by 0.15 because it's reducing balance, 7,500. Again, my month, so we just divide by 12, 625. whoops, 625. On October 31st, the business was informed that Eagles SC had been declared bankrupt and will be unable to pay any of the amount owing. So remember, we're writing off bad debts now. So we go allowance for allowance for doubtful debts. We're going GST clearing, and then we're going accounts receivable. Eagles SC. Remember, if FC or SC? SC. Remember, if it says in the trial balance or the question, hey, you need to include this, make sure you do. So let's go allowance for bad doubtful debts. So we know Eagles SC owed 1320. Now we need to remove GST because remember we've got to count for GST in these three. So we go 1320 divided by 1.1 will give us 1,200, and that is our allowance for bad and doubtful debts. And then 10% of that just happens to be 120. Boom, simple. Now, I'm going to do the bad debts last. We're going to do insurance next, okay? We're going to do the insurance next. So, let's see. A payment of 1650 for insurance, including GST, have been incorrectly posted to wages. So, we made a payment to insurance we made a payment for insurance, put it as wages. So we've got to create the insurance, and that's an insurance expense, by the way. And then we go GST clearing because that will incur it, and we go wages. Now with the wages here, because we made it to wages and it was extra that shouldn't have been made. So we have a look, we go a payment of 1650 for insurance including GST had been posted to wages. So we go 1650. Now how do I get the insurance expense? 1650 divided by 1.1, 1,500, and then 10% of that, 150. So you just cross a zero out if it's 10%. Next and last, we do the bad debts. Now I skipped the second last dot point. So all sales are made on credit, and doubtful debts are 3% of net credit sales. So we've got to go through our net credit sales. So we see 75,000 is our sales, 3,500 our sales return. So 75,000 minus 3,500. So that's 71,500 multiplied by 0.03 gives us our allowance needs to be, and I'm not going to put it there, I'm going to put that number in this square here for the time being. That's the number my bad and doubtful debts needs to be. So if I look at my bad and doubtful debts balance at the start of the month, I go allowance for doubtful debts 2300. But if I look, there's been an actual change there already of minus 1,200. So we see my balance is actually 1,100. Now, that's before I've accounted for the credit sales. So after accounting for the credit sales, it needs to be 2145. So I just go 2145. And it's going to be 1,100. 2145 minus 1,100 will give me 1,045. And that will be my bad debt expense. And this is allowance for doubtful debts. So 1,045. 1,045. Now, fun fact, if I just delete this, this is the number it would need to appear on the balance sheet, that 2145. So what I'm going to do now is I'm going to plug all the numbers in here. Okay, I need to merge these through. Great. You know what? I might just do this little trick. Yep, good enough. I was just like, yeah, I don't have the patience. Nothing lines up. Great, there we go. Alright, I just did it that way. I was just like, we'll do it that way. Alright, that hopefully aligns. Yep, that all aligns. That all aligns. Let's do this. So, we need to put in our accounts, making adjustments as we go. So, I'm just going to be working through. Eagles FC's not there because they went bankrupt. So they got written off. So nothing for them. Western FC 27500. None of that changes. So if it doesn't change, you just copy and paste the number. You just go, yep, cool, done. So I'm just going to write these out quickly. Accounts payable. I'm just going to work down. Accumulated depreciation. So if I know there's a change, I'll just do that. Fixtures and fittings. The good thing is, by doing this right, you won't actually, like, you can just copy and paste the numbers afterwards. So that's a nice little trick. So if we have a look, 9,000 fixtures and fittings, and so we go fixtures and fittings 625, so it just becomes 9625. And then you got van 25,300 because 25,000 plus the 300. Now, little pro tip here, I'm actually just going to go like that, and I'm just going to bold each of the ones I've done. I won't bold them at the end just because it looks nicer, but I'm just going to be bolding them just so they do stand out, and you just go, cool, I see how these work. I'm just going to change that there because that's annoying me as well. Alright, so that's accumulated depreciation. We got advertising. There was a change to advertising, if you remember. So we started off with advertising of 2,500. We actually added a little bit more of 410, so it becomes 2910. There we go. 2910. Next we have allowance for bad doubtful debts, or for doubtful debt. There we go. Allowance for doubtful debt, and it becomes that 2145. Remember that number we worked out earlier? That's where that comes in, 2145. We've got bank. Bank stays as is because we didn't touch anything. Capital stays as is, we didn't touch anything. So that becomes 35,000. And cost of sales is that much. Whoops. Cost of sales 35,000, and then capital would become 33830. 33830. There we go. And discount expense, discount revenue not touched, so we'll just go straight in. Discount expense, discount revenue, discount expense, 3,100. Discount revenue 1790. You've got drawings 4,500. They weren't touched. If they're not touched, then you don't need to worry about them. We got fixtures and fittings, GST clearing change. So fixtures and fittings, we'll put in 59,000. GST clearing. Now, GST clearing did change on 2 transactions. So I'm just going to put this here. Oops, I didn't do depreciation of van, so you just only tick off the ones, you've actually done. Alright, so GST, we've got 120 as a debit, and we've got 150. So 270 needs to be debited. So by debiting that 2,700, whoops, alright, that one's also done. So we need to debit that 2,700. So if we have a look at our pre-trial balance, we go 3900 minus 270. 3630, because you need to make those adjustments and put it in the right squares. 3630. There we go. GST clearing done. We do insurance, and it was 100 initially, but we did have a transaction here to add 1,500, so it becomes 1,600. So we make that change and we go 1,600. Now, I'm always bolding. Every time I do one or I knock it off, should be 1,600. Alright, looks like there's a bit more I need to add on at the bottom. Great. We've got interest expense didn't change, but inventory did. So interest expense, we go 400. Inventory, we move it to the count amount, which will be 64,100, and we go inventory here. That means, yes, we've accounted for it. So every time you account for it, just bold it. We've got loan, QZ Bank, repayable at per month, and we're going 55,000. Now, when we do the balance sheet, that will pay attention. We've got prepaid rent. Now, prepaid rent changed because we had a rent expense, so we need to make that amount go down 1,500. So if we have a look, we see it's 12,000 minus 1,500 will give it a balance of 10,500. You've got sales returns all stayed the same. Sales returned. So our sales was 75,000. Our sales returns was 3,500. We've got van and we've got wages. Van and wages. So the van was 36,000. Our wages 5,400, but then it adjusted to take 1,650 out. So let's get the math onto there. So 5,400 minus 1,650 will be 3,750. 3,750. Huzzah! So now that we've accounted for all the information, anything not bolded is what we need to add in. So we just got to add in these little bits at the end and then subtotal it. So let's add in what has been missed. So if we just work our way down, we see inventory loss 900. Inventory loss 900. And then we just keep working down. We go rent expense 1,500. And you can do this on your paper, even if you do it on pen and paper. Just tick it off. Accrued advertising expense will be 410. You've got the depreciation of van, depreciation of fixtures and fittings, And the last one is your bad debts expense. Gross. So our bad debts expense also needs to be added in. So let's just have a look. Let's just go, okay, where are we at? So depreciation of van. So we've done those two, 300, and fixtures and fittings was 625. So those two are done, and then it's just bad debt expense, 1,045. And that should be everything. Now, we need to subtotal this, so we're just going to subtotal this. I'm just going to close these little lines up. So we're going to add up the credit side, all because, quite simply, it's on one page. 46,000 plus 9625 plus 25,300 plus 2145 plus 33830 plus 1790 plus 3630 plus 55,000 plus 75,000 plus 410. So that's the number. I'm just gonna double check these numbers. Oh, I left off bank. Wait. Oh, I put bank on the wrong side and missed buying expenses. So what I'll do is I'll do some quick adjustments. Cut. Insert. Yep, I did make a slight mistake. I did happen to leave. Whoops. I did happen to leave, so I'm just gonna cut everything from bank down, recut it in, and there should be buying expenses. I actually missed buying expenses, so that buying expenses becomes 1,600. The bank was a credit of 5,100, and this is why we do trial balances. So if you ever ask, why do we do trial balances? It's because of mistake. We want to pick up any mistakes that may occur. 33830, 1790, 3630, 55,000 plus 75,000 plus 410, 257,830, 257,830. So now if we look at the other side, 1045 plus 625, nope, you need to make sure it's all gone. There we go. 1045 plus 625 plus 300 plus 1500 plus 900. Nope, I don't know what. I think I hit the 01 too many times. There we go. 625, 300. There. So this is why you got to be careful using your calculator. Make sure you get it right the first time. There we go. So 900, 3750, 36,000, 3,500, and 64,100, 400, 1,000. Oop, there we go. See, catch a little error there. 59,000, 4500, 3,100, 35,000. There we go. 1600 plus 2910 plus 27500 257830 257830. So as I was recording this, I decided, hey, I'm going to make this into two parts. So thanks for watching along part one. So this will cover A through to C, and then we're going to go D, E, F, G, and H afterwards. So on that note, stay safe, look after yourselves and each other.